Hey, welcome guys. Welcome everyone. It's the SaaS Founder Show. We're back for another episode here. Nothing going on in the world to be paying attention to. So, I'm sure everyone's looking for something on these slow news days to do and check out. So here we are, back again. I'm Tony Zayas, joined by Andy Halco. And this week, our special guest is Andrew Butt from Enable. And so we'll talk to Andrew in a second. But Andy, how are you doing? How you holding up out there?
I'm fantastic. I was thinking that we need to start doing these shows, starting off with me doing like a Seinfeld stand-up and a kind of like little intro and stuff. So that'll be coming soon, right?
Yeah, for sure. That sounds like a good idea. So Andrew, welcome. Thank you for taking the time out of your busy schedule to jump on here. We're super excited to hear about you, about Enable, what you guys have been able to accomplish. Something that I noticed over at the site is I saw, on the About page at enable.com, it says the world needed a better way to manage complex B2B deals, so we built one. Would love to hear the story of just, tell us about Enable, how the idea came to fruition, and we can kind of go from there.
Sure. Yeah, great. Well, Tony, Andy, thank you for having me. It's great to be here. Yeah. And yes, so where to begin? I would say probably the beginning is kind of my two passions in life were always computing and flying. So as a child, I wanted to be an airline pilot, and would sort of try and hang out at airfields as a young kid. And I met a flying school and basically helped them with a lot of their computer programming. This was in the 90s, really late 90s. And they gave me some great advice. They said, stick to computing as a career and do aviation as a hobby. So that did turn out to be great advice. And it was through the flying school I met my co-founder, Dennis Short. And Dennis was already a very successful entrepreneur back then. This is in the UK, if you can't tell by my accent, by the way. And so Dennis was running a very fast-growing distribution business, and that's now actually the largest in the UK in his sector, which is health, beauty, and household. And these complex deals that we talk about, that you refer to, they were causing a lot of challenges. Okay, so we can talk more about that, but that's really where the initial inspiration came from. Is really these complex deals within his business that we kind of, and that's led to a really fast-growing company. We managed to lose Andy here.
It looks like we lost Andy, so hopefully he'll be back. But that's super exciting. So what's so the deals that you guys are working with, is that like distributors, suppliers, kind of a supply chain in that?
Yeah.
Is that?
Yeah, I mean, what's fascinating is if we look at the whole GDP, whatever it is now, $86 trillion, I think it is.
Yeah.
About a third of that GDP is business that goes through distribution. Okay, so there's been lots of digitization, hasn't there, over the last 10 years and probably even more, 20 years on kind of e-commerce, B2B and B2C. But actually, that's there's a whole, that's, let's say, 2/3 of business, but there's a whole kind of third, call it, say, 30 trillion a year, where it goes through that supply chain, and a lot of those guys are in the dark ages, and so business is done still by email, telephone, and dare I even say fax. So yeah, these deals that we are focusing on and managing are in that supply chain to make that supply chain really flow better. And I've coined the phrase the deal economy, and it does refer to this 30 trillion of trade that goes through the supply chain.
Pretty cool. Can you guys hear me? I got kicked off.
Yeah, you're back.
Yeah.
I assumed you didn't want to talk to me anymore, is what I just assumed.
I thought I said something wrong.
Yeah, right.
You were sort of shutting down the session.
That's, the internet these days. It's crazy, but I'm jumping back in, but hopefully you talked a little bit about the product. I always like to start with kind of origin story. Where did you really get started? What'd you do before? And what did that process of like getting started up look like?
Sure. Well, we talked a little bit about that, but let me, whilst you weren't here, Andy, but let me expand on that. So I mentioned that I met my co-founder whilst we were both learning to fly helicopters, and I was a kind of computer programming geek. building various systems. And the flying school were really happy with what I was doing, and basically gave me some free flying lessons. This is going back to when I was a kid, really. So that was extremely kind of them. But I met lots of fascinating entrepreneurs during that time. All these guys learning to fly helicopters and so on. And so that was where the whole thing started. But there were quite a few years where we were building different types of software before we landed on this current business. And we launched several businesses together. Some of those were services companies where we were building software for other companies. And we built the team up to 100, largely engineers in the UK, building all sorts of software for different types of companies. And that really led to the inspiration to launch a SaaS business. Okay, so we co-founded a SaaS business back in about 2010, and that was all in construction information, health and safety information, and so on, and exited that to private equity in the UK. But this business, this really was launched because we kept having requests from customers saying, we've got all these deals, they're on spreadsheets, they're a real pain to manage, and we were actually building custom software. So we were building, on a per customer basis, software to manage these deals. And we're a bit slow, but eventually we thought, this is just a huge opportunity. We need to launch a genuine SaaS product, and that's really when Enable was launched, and we can talk more about that.
So you had a couple businesses prior to this, and even an exit. When you started Enable, were there any great lessons that you took from those past experiences as almost principles for starting out this new endeavor?
Yeah, absolutely. I mean, I think one key thing is I was in the UK. A lot of our team are in the UK. We've got great people there, but it wasn't like being in Silicon Valley. Okay, so access to kind of the tech community and also access to funding was very different from what it is now. And we basically had to bootstrap, which was great and a good discipline. And we were making a profit from a very early stage and growing steadily. And that was fine, but we were really just taking on the work, whatever work we could get. We were building software for anyone to just pay the bills and just fuel some growth. And then that was allowing us to build some of our own products on the side. So that's very much how we were working for a few years. And then, when I discovered kind of SaaS and Silicon Valley and realized that actually, because our idea was good and there was a huge market opportunity, it would be possible to raise some great funding and focus on that and kind of be patient for profit. The old lesson of impatient for growth and patient for profit. So I guess to answer your question, Andy, a big lesson is to have that focus and really have that clear vision, have that focus, and then go and raise some funding and develop that business rapidly, rather than being kind of distracted by doing lots of other things just to kind of try and pay the bills. So that's definitely, if I'd learned that a few years earlier, that might have been great. So
you raised money for Enable?
Yeah, so I mean, the story was that we were bootstrapping up until 12 months ago. We were winning a lot of US and Canadian customers from the UK. And so we realized, look, we need to set up in the US for a start, because we weren't even here and we were winning customers. So we thought, what can we do if we're here? And then also, we need to raise capital, because we can take this business public and well beyond that. But we're not going to do that by bootstrapping. So 12 months ago, I basically relocated from the UK to San Francisco, raised a Series A. And that's quite a fun story, again, that we can talk about. It took me 2 weeks to get here on a ship and an RV, which we could go into. But we raised that 12 months ago, and that's really been rocket fuel to get this company growing on a much faster trajectory.
Yeah, I can imagine. And I'm always curious to talk about with SaaS founders, the raising money process, because I think when you're on the outside and you hear about this and you're just starting a business, you hear, that I went and raised this much money. In your head, you think it's go to an event or meet somebody or whatever it is. What for you did the raising money process really look like?
Sure. No, it's definitely a fun process and intense and a bit of a roller coaster. And so I think, what was most successful for us was being introduced, so warm introductions. And I had some great kind of people and advisors around me that really could see what we were doing and were definitely more tuned into the venture community than I was. And one of those, by the way, were our counsel, our legal counsel. So we were recommended to a great firm when we were in the UK, but they're an American firm, and they work with all the VCs. So that was particularly helpful. So we got a series of warm introductions, and this is winding back now to November 19, so just over a year ago. And we kind of turned up and did some pitching. And my message was, look, I'm going to be here in the country from January 20. All right, it's now November 19. So just kind of showing you what we're doing. And if you're interested in talking more, let's meet up in January. And what basically happened was, I think the initial response is everyone says, it's amazing, well done, congratulations on coming this far. And it's, so on. And then, of course, you start getting the rejections coming in, where people say, well, no, it's really good, you're going to do really well, but we're not, it's not for us because. So then you kind of think, oh, okay, fair enough, and lots of no's, and then you start to get the yeses, and the yeses are along the lines of, we want to do this and we want to do it right now. We're not going to wait till January. We need to get going because time is the killer of deals. So that was the sort of abbreviated version of the story. But needless to say, I think in the end we signed a term sheet with our lead investor at the end of December, and we'd only met them in the middle of November. So it was quite a fast process.
Wow. Now, what was the biggest takeaway from that process? Either something that was really valuable for you to do right, or a big challenge that you would do differently?
Yeah, I mean, I think this was the first time that we'd ever raised any capital into any company. So we were a bunch of Brits who, here turning up in Silicon Valley. So we were really naive and just didn't know what was involved. And I mean, the team pulled together really well, and we just, we worked 24/7 to get through and provide all the info and the DD that the investors needed. But certainly next time around, and next time will be coming, and it will be soon, we will be much better prepared, and we'll have our data room set up well in advance. We'll have everything in there that we know everyone will want, and we will run a much tighter process where we go to, we target and approach a lot of investors at the same time, and then we really run the process. Whereas I think last time it was much more ad hoc of having a nice meeting, and we were kind of then being led by the timescales of the investors who were interested. So that would be a key learning.
Tony?
Nice.
I would just say, to shift gears a little bit, I would ask, I see that you have some core values listed at your site, and I'm curious how you convey, how do you find the right people? Does that play a big part in it? And kind of where do those core values come from? Talking about kind of the enable culture.
Sure, absolutely. So I think for me, the most important thing is having a very exciting mission, and really to quote kind of Steve Jobs, how are we going to make a ding in the universe, or was it a dent in the universe? Well, one or the other.
Yeah.
And another, I'm a member of a great CEO peer group, which is called 10x CEO, and they're all venture-backed SaaS CEOs, and one of the chairmen there talks about building companies of consequence. So how are we going to build a company that has massive kind of global consequence? And for me, that's the number one thing, because people then can see that vision and that mission, and it will resonate with them, or it won't. And we've got a clear purpose here. So that's the first thing. And of course, I think you mentioned pay or compensation, and for me, that's a hygiene factor. So we need to pay the top market rates to get the best and retain the best people, but it's more of a hygiene factor. And then I think on the values, those actually did come from the team. So we literally ran workshops with our entire company, and team by team, and we used cards. And this was done by my COO, David. So we literally had cards of all sorts of values and got every individual to kind of rank, which ones represent what we're all about. And there was great commonality, by the way. So across every team, whether it was engineering or product or sales or customer success or finance, IT, there was huge alignment on those 7 values.
That's really cool. How big were you guys when you kind of worked through that exercise? I'm just curious.
Yeah. So that particular exercise, we probably were about 80 people, I'd say.
I'm kind of curious, your role personally, how it's changed from day one to now, after you've gotten some funding and where you're moving into the future, as one of the CEO and the co-founder, what has your day-to-day changed and what has it, evolved to over that time?
Sure. Yeah, so I think in the early days, I was always the kind of salesperson, really. So again, David was really with us from day one. So it was David, Dennis, and me. And Dennis was this great entrepreneur who was very well connected and really understood business. And David and I were both geeks, but he was the kind of brains, really. So he was doing the development, the engineering, and the kind of operations and clearing up after my mess. I was more talking to customers, talking to prospects, looking at the market, selling. So that was the early days. And then as we grew, that naturally moved in a direction where he was kind of running operations and engineers and so on, and I was running sales. And I think where we're getting to now is I'm much more trying to be a sort of genuine CEO. So by that I mean kind of running the leadership team, and I've got the different functions, obviously, and then what I'm basically doing is talking to investors, talking to the board. So it's a much more kind of balanced and rounded role that I'm looking to achieve, and also bringing in great people. Of course, that's so important with experience. So that's what I'm doing now.
How do you find those great people? You mentioned that, and I think in every interview we've ever done, we've talked about people and finding great teams. And it's, it seems like it's always a challenge. So how do you find great people? How do you know that they're great? And then how do you keep them?
Yeah, sure. So we've got some different strategies here. One that's worked for us very, very well is we have hired people from university, who are great, high caliber, very talented, brilliant attitude, but actually don't have much experience. And in whether that is in, for example, engineering, I mean, that's been very successful. We've hired mathematicians, people that are great at physics, for example, and trained them, and really then been able to mold them to our values and our ways of working. And most of our engineering is in the UK, which works very well for us. And literally the guys have bought real estate. They've literally bought their first house next to our office. And this is obviously pre-COVID, but we are going to get back to our office. So that's been very good. And we've kept people for years and just promoted them from within. So I think that's a key strategy. But the other thing is I have recognized that for us to achieve hypergrowth on a sustained basis, and as I say, get past, get to IPO and beyond, we also need to bring in people that have done it before as well. We can't, it still take too long for us to teach ourselves. So with that, it is about attracting people that have done very specifically what we've done. So B2B SaaS, at our level of revenue and tracking it where we want to be over the next couple of years. And we're in the early stages of doing that. So I'm using some search firms and some great people to help me, but also we are sort of networking and being approached by people as well. And I will be making a very exciting announcement. There'll be a press release in the next few days, but we've just brought on board an amazing kind of go-to-market leader who's going to be leading our global revenue function. And he has very specific domain expertise and has done it before. So I guess the short answer would be networking, talking to other CEOs, networking in Silicon Valley to really bring in that talent that has done it before, and then merge it with our great team who we've kind of promoted from within. And that's the kind of happy hybrid that I'm looking to maintain.
Yeah, with the pretty big team there, Andrew, I'm just curious, how do you really articulate the vision that you have for the company and help people to understand that? Because you got a lot of, a large team, different functions. I love what you did with like the values and things. But how do you, Andy talks about this and actually has a white paper, it's called the vision gap, right? So how do you get everybody to see, you have that vision in your head of where you are, where you want to go and be? What are some of the things you do to help articulate that so that everyone's kind of on the same page and in it together?
Yeah, sure. So, I mean, I think it's the C word, really, isn't it? We can't over communicate. Well, is that the O word? But we can never over communicate. So it's lots of communication. So we have good all hands meetings. We have different forums where people get together. We have, for example, all of our managers meet with me very regularly, and so I can kind of tell them where I'm trying to get to and what's in my head, to use your words, but then definitely get them to play back what they're actually hearing, because again, communication is about what people hear as well as what someone says, isn't it? So it's a lot of communication and a lot of forums, whether it be events or whether it be just simply emails and newsletters and videos and that type of thing. That's the number one thing.
I'm curious, do you use any management systems like entrepreneurial operating system or Rockefeller habits? Are there any systems that you've found and they've helped helped you manage successfully?
So, I mean, we have a lot of our own homegrown systems actually that we've built in house, and we do also use some really good best of breed systems as well. So whether it be Salesforce, which of course has grown and does a lot more than CRM, doesn't it? And for example, we have our own business planning methodology. We use the 1-3-5 of one vision, 3 kind of core objectives, and then five goals, if you like, for each quarter, and that's for every function. And then we have that for the company as well. So the overall company, and then each function, and that all knits together and then knits down to individual people. So we do use, I think, some great methodologies. We're using OKRs in a number of areas. We're tracking weekly metrics across the business on all functions and roll that up to 4-week periods and quarters and so on. But we don't. I have come across some of those operating systems, and I need to investigate further. Do you guys have any recommendations on that, or maybe I should look at some of your white papers, Andy?
Yeah, you can always look at that, but I think it's just about using, like, OKRs are great, and the 1-3-5. I'm always more curious about how do you make sure that you stay accountable and stay using the system. As long as you have a system, I think that's a foundational piece. But then where I see a lot of SaaS founders fall down, and I'm kind of curious again from your standpoint, is how do you hold everybody accountable to these systems and these ideas? Because it's easy to get busy and skip over a meeting, or let some sort of piece go. And so how do you as a leader make sure that you stay on these systems and processes that you develop? Yeah,
well, I think we try and keep it as simple as we can, and again, try and be focused on the right things. And there aren't too many metrics which are right at the top of that list. So I think for me, the most important metric in the whole business is net new ARR. Okay, and that covers product, it covers retention, it covers customer satisfaction, it covers new business. Because at the end of the day, if the product is not delivering, then people will be churning. We won't be able to win new business. And if we're not retaining customers, even if we're adding lots of new logos, we're not going to be hitting the growth trajectory. So, one of my favorite articles of all time was the one written by Frank Slootman called "Amping It Up," and he talks about this, that even his companies like ServiceNow and Snowflake, a sort of 80 billion or whatever it is now, 85 billion market cap. There was really one metric, which was whether it was net retention or net new ARR that he measured the whole kind of leadership team on. So I think for me, it's about trying to take away the noise and work out what's really, really important. And if we can measure and get these things right, then most other things will sort themselves out, rather than being too kind of obsessed with millions of metrics which are maybe not as important.
Yeah, that's great. Do you expose a lot of metrics to the company and team? You mentioned there's a book, The Great Game, and it talks about a critical metric, but then it's a lot about how you are very transparent about business metrics, even including finances. Yeah. Where do you kind of stand on that, transparency for your organization?
Sure. I think it's pretty high. So, I mean, we share monthly KPIs with the whole company, and that does go into things like burn rate, in the month versus the plan and what the difference is. So it does go into financials there. Also, we have weekly go-to-market metrics that and we don't hide from anyone, but we specifically share that with our whole kind of sales and marketing teams. And as I say, that is literally weekly where we are versus plan on everything from top of funnel down to existing customers. But it's a really good point, because one debate we had, for example, is our, on financials, our cash balance. Okay, I've got no problem telling anyone in the company what that is, but of course it is going down. So what will people start to freak out? If it does run down quite low, and we've got a great debt facility, for example, that we're not using, and so we're fine. By the way, we're healthy right now. But will that worry people? So I think it is the eternal debate, isn't it, of do you share absolutely everything, and is that the right thing to do, or actually are there good reasons to not share certain things? But I'd say we found a balance which seems to be good, and there's a lot of detail that we share compared to other companies.
Yeah, and I find that an interesting debate, because I've seen that where people are super transparent, like you said, how much money is in the bank, especially in a startup when you're trying to get folks really excited and feel like they're, an owner in the business and just moving at that pace. But then, like you said, I've heard stories where the bank account gets low, it's being shared, and people start looking for jobs.
Yeah, so exactly.
It's such
I'm used to kind of I can live with quite a lot of uncertainty, as you'd expect, as I'm sure most of your audience can that are listening today. But I've had plenty of times where I've got, say, 2 weeks of cash in the bank. I mean, that's not been for long. It's not been quite a long time ago now, and now I've got multiple years of cash in the bank. But I've had plenty of months as I've been building this business where I'm thinking we will not make payroll unless we collect this money and this money and this money, right. And that's just something I live with. But I know that a lot of people, that would definitely be very concerning. So as I say, we're a long way from that right now. But I think consistency is important, isn't it? And if you share things, once you start sharing things, then you would never stop sharing them. So we have debated, and I think we've decided things like actual burn versus budget is good. And then we can say, look, we are burning more than we wanted to, or we're burning less. So that's pretty transparent, but maybe not absolute cash.
So I'd be curious to hear, just, based on where you guys are at, what your growth goals are, and perhaps, what are you looking to do in this year, 21? I know you said you recently hired someone to lead the revenue side of things. Curious to hear what some of those initiatives might be, and how you track that progress.
Yeah, absolutely. Sure. So, I mean, in simple terms, we've more than doubled our customer base in the last 12 months, and we were originally going to do more than that, but when the pandemic struck, which was days after we closed our Series A, by the way, we did decide that we would just have a slightly more cautious plan and think more about runway than kind of absolute growth. But nevertheless, we've done more than a double in terms of customer numbers, and revenue will be similarly in line with that. And this year, we're planning to do the same again. For sure, we want and we will make sure the growth rate is more than 100% year on year, because when we do our next raise, which will be, as I say, in the next 12 months, then we need that growth rate to be over 100% still, and we need to be 120% net retention, and there's lots of other things that we're tracking to get to. Now, the new kind of global revenue leader I'm bringing in this week, he has a very established track record with two previous companies, well, more than two, but two that are very similar to us, where they went from our current size, which is kind of like the 5 to 10 million range, through to sort of 40 to 50 million. And one of them was acquired, and the economics of that acquisition were very good. And the other one actually went public whilst he was there. So that gives you a sense. We're kind of 5 to 10 million, growing at 100% year on year, and we'll be sustaining or accelerating that growth rate. They're the headline numbers.
Be curious where you found him, the gentleman that you're bringing on board to focus on revenue, because it sounds like obviously he has a track record. Is he someone you were aware of and pursued? Or? Yeah.
Yeah, absolutely. And it's funny because I mean there's no way we would have been able to get him, say, 6 months ago, because we just, we were too small, and we were too unproven really in the US. But a lot has kind of gone well in the last 2 or 3 quarters, and we've been kind of starting to use that the funding we raised. We've been hiring a US sales team. They've been absolutely winning deals and doing well. And so we've now got a track record of continued kind of growth in the US, and kind of got to that sort of threshold where a really good proven guy would be very interested in taking the reins. So this guy, was a very successful revenue leader at another kind of VC funded SaaS company, and I just got to know him through a network. I initially thought he could be like a board advisor and give me some great advice on, say, a monthly basis. And he's been pursued by lots of companies since he kind of completed the integration of his previous company that was acquired. Okay, so it's really great news. But he's seen the opportunity that we have here and how big it is, and is really excited. So the timing's been perfect, and the stars have aligned.
That's great.
We've talked to a lot of B2B SaaS folks, and one thing I don't think we've gotten into a ton, and I'm interested in doing, I was on your site and you offer, a free trial, so go up. How did you guys work through model? Because in B2B, it's, you can offer a free trial, pilot programs, sales where someone has to do a demo and walk through it. How did you think about both pricing and like go-to-market strategy as you were building the product?
Sure, great question. So the thing that really inspired me is I wanted to make the software consumer grade, and the space that we're in, as you've pointed out, distribution, supply chain is an old-fashioned kind of dusty space, and software vendors are really old school. So we wanted to say this software is modern, it's easy to use, it exists. You can just sign up and start using it. It doesn't take very long, for example. So things like putting some pricing on the website and the free trial, and we've got an API that's documented on the website. We've got all of our help center publicly available. That's just to show that this is real and it's easy and you can just get using it, and none of our competitors have that at all. But we also do all the other things you said. So we do demos with humans, and we do pilots for sure. And we recommend and say to people, just get started, try this product. And some of our prospects say, well, we're running an RFP and it's going to take 6 months. And we say, well, that's fine, carry on and do that. But in the meantime, let's just do a pilot anyway, because you'll see how great this is. And you might decide to abandon your RFP because it's easier to use our product than it is to do an RFP. So we're trying to make it consumer grade. And I think you guys probably have come across Siebel before. I talked to some salespeople and they kind of they haven't ever heard of Siebel. But have you guys heard of Siebel?
Yeah.
Yes.
So I think when you look at Salesforce and Siebel, Siebel was kind of pre-cloud, wasn't it? On-premise, very expensive compared to what you'd pay today for CRM. And Salesforce's whole kind of disruptive message was, you can just our software is on a web page and it's $50 per user per month, and you can be using it today. So that is exactly what I'm replicating within this distribution space.
What about the pricing side? How can you, because that's a place that I think a lot of SaaS founders I talk to, especially in the early days, and even, the first year or two, struggle with it. How do they figure out what their price model should be? Did you use advisors? Did you go through a process? Did you use a system? How did you go through the pricing side of it?
Yeah, no, I think it's challenging, and I know even very established companies continue to change their pricing. I mean, I bought a Tesla Model X in the UK a couple of years ago, and virtually every time I logged on to Tesla.com, the pricing was changing, and then it continued to change in a downwards direction after I'd placed my order. So that wasn't that wasn't very good, but they sorted it out, so I was very happy. But I was thinking, wow, those guys, I think back then they were like a $40 billion company, and now they're like a $900 billion company. But anyway, if they can't get the pricing right, then how can anyone else? So I think we're still very much experimenting all the time. We want the pricing to be linked to value that customers get. We want customers to get 10x the value as well. So we want to leave money on the table because we're in a market share game now where we're really trying to get our product out to as many companies as we can and help them to get huge benefits from it. So we want to design the pricing that way. But all of the things you've said, talking to advisors, talking to customers, having some focus groups with customers to try different models. And what we landed on was we didn't want to restrict things like number of users or number of suppliers that can use the product. But we recognize that if a distributor is doing $20 million of business or $20 billion of business, there's a huge difference in the value they get from the product. So we've kind of linked the pricing to the value actually flowing through the product. Mm-hmm. But look, we definitely, this is going to continue to change. And I think with our new guy that I mentioned, I'm sure he'll have a lot of views. So watch this space.
Yeah, it's interesting. I've worked with a number of pricing consultants over the years with clients and, et cetera. And it's interesting in the software space because you do tend to be public with your pricing. And there is a model where you kind of change your pricing, and over time, as you move it around, you start to see that trend of what people are willing to pay for something, and it becomes more and more profitable as you've, kind of chosen different prices to go after over time. But one of the challenges, I think, for that model in SaaS is that your prices are public and it's hard to do that testing. So you almost have to do it internally. But
yeah. I mean, our kind of average contract value is quite high compared to a lot of SaaS companies. And so we have got pricing on the website, but it caps out. So it almost just shows the starting point. Right. And we're some of our deals are certainly hundreds of thousands of dollars a year. And in that kind of territory, there are some variables, if you like, depending on what the customer needs and the level of support they need. So I would say we don't have that kind of transparency that, for example, if we were charging $50 per month, to use my Salesforce, my old Salesforce example, that there are, we can still have a conversation and there are variables we can bring in. All we've put on the website is just a starting position, and you can absolutely sign up today and pay that price for sure, but we don't, it's not that kind of comprehensive really what's on the website.
What about finding customers and marketing? We talked last week with a SaaS founder, and he talked about in the first year, it was a very manual process, going out and talking to folks to find clients, and then as he evolved the business and got into funding, they shifted to a marketing route where all of their opportunities came through, SEO and other methods, and they didn't really do any manual sales at all. How did that work for you? How did you get your first customers, and then how do you now today really go out there and find opportunities?
Sure. Yeah, so it's interesting because we're doing really well on SEO. So we're getting inquiries all around the world and signing customers up all around the world just by people searching for rebate management software, for example. We are number one. But the flip side of that is there aren't that many people searching for it because it's a new category and people don't know it exists. So they're kind of happily using their spreadsheets and they don't really think there's a category there. But there's no doubt we are winning business from inbound SEO. We're winning business from inbound kind of paid acquisition on LinkedIn and Google. We get a lot of referrals for sure. So customers refer their fellow CFOs and CEOs of other companies. But one thing which is really powerful for us is a network effect, because in the supply chain, we're being used by distributors and retailers typically, and the first thing that they do when they sign up to our product is they invite all of their suppliers. Because if you are a distributor, let's say you're an automotive distributor, automotive components and automotive parts, you will have, say, at least 1,000 suppliers who are the manufacturers that you take the parts from. So you give them a login to enable.com, and then you are creating deals with them and collaborating on the deals and signing off the deals and so on. So that's great because those manufacturers also are doing deals with every other customer, and they can actually do a free trial, to go back to your point, and they can sign up. So this is something we haven't really tapped into yet and monetized in a big way, but we are seeing early wins. We are converting some of those already. And what we've decided is to just focus on our existing motion to get to the next milestone, which I've given you a sort of a hint on what that is, but the next milestone. And then at that point, and we'll when we raise again, we'll be investing heavily in product-led growth and really monetizing that kind of network and looking at making ourselves more of a marketplace rather than just a software platform.
It's really cool.
Going to kind of the team aspect, Andrew, what is the dynamic between you and your co-founder? I believe he's on the board, correct?
Correct, yeah.
Yeah, we'd love to hear just what that's like, and then also hear just, other voices that you tap into for guidance and ideas and suggestions. Because it sounds like networking has been a big part of your growth and success.
Yes, yeah, no, it certainly has. Yeah, absolutely. No, so I have a great relationship with Dennis, who's my co-founder. He is on the board, and Dennis has a very successful business and several businesses actually in the UK, which is probably his kind of day-to-day focus. And then so he's really kind of involved in the board capacity, which is very helpful. And being a very successful distributor, having all of these challenges himself is clearly a great kind of board perspective. I think other things are, I mentioned 10x CEO, and that's been a great peer group for sure, and to be working alongside other CEOs at a similar stage on things like revenue and growth rate. And of course, the chairs of that group are all kind of ex-SaaS CEOs. So that's a great source of kind of mentorship and advice. And then I think a lot of the blogs that are around. So, one guy I really like a lot is Jason Lemkin and SaaSter, which I'm sure you've come across, but there's loads of great advice on there. And some of the VCs have very good blogs and information. And I should say that our kind of VC partners, so Menlo Ventures and Sierra Ventures are the kind of primary two in the Series A. They're just great. They're great people. They're kind of on our board, and they have got great experience, of course, of building businesses. And so I have one-to-one sessions with them every month and get great advice.
Excellent.
Now, in your previous businesses, did you typically have mentors that helped you out there as well? And have you kept any of those over that time?
Oh, absolutely. Yeah, for sure. So I think before I moved to the US and in the previous businesses, then certainly Dennis and I were physically and geographically very close together. So there was a lot. Dennis has given me a huge amount of mentoring over those years. And yeah, again, through networking, I've met some great people, and I've certainly kept in touch with them. So it's that continues, and I've always valued having different people. I think in my very early days, I kind of would attach myself to one person and think, everything they say is kind of the gospel. And I realized quite early it's so important to have different perspectives, and take kind of nuggets from each individual person. So I've since then been keen to surround myself with great kind of successful people.
I've asked this question before with mentors, but it's always an interesting thing. I think it's fantastic and having mentors and feedback, but you get a lot of different viewpoints and opinions. Sometimes you agree with them, sometimes you don't. How do you take all that information in and utilize it and make decisions from it? Because again, there can be a lot of mentors with a lot of different opinions.
Yeah, absolutely. No, it's a really good point, and yes, I'm very familiar with that happening. And I think at the end of the day, we as entrepreneurs or CEOs, we just have to back our judgment, and it's better to make a decision and then make another decision or change it if needed later down the line. There's no such thing as a perfect decision. I like the Bezos kind of point about if he's got more than 80% of the information, it's too slow, or something along those lines. So and also one of the guys at Menlo, who I find very inspiring, he said to me, anyone can make a decision when they have to, but it's really making the decisions before you have to, and that I think is important. So yeah, I mean, clearly some things are very clear cut and it's very easy, but there's plenty of things where there isn't really a right and a wrong, and it's really just using my experience, my intuition, call it what you like, gut feel, and I'm sure some of those decisions will turn out to be in need of correction. But I think there's no easy answer to that, Andy. It's at the end of the day, yes, I recognise it's my responsibility to make the final decision, and some of those are quite tough. But I'm just going on take all the advice I can get and then go with the one I think is the best.
Yeah, and I've just seen that as a challenge for other folks, founders, and CEOs that I've talked to, is that they sometimes just get overwhelmed with insights because they've got investors, they've got a board, they've got mentors, family, employees, and sometimes it just gets overwhelming. So I'm always curious how people manage that.
Yeah, I guess one thing is probably to not ask too many people, and also to keep the context right, because again, growing a company on the West Coast with high growth rate and high burn is a very different mentality to, say, doing it in the UK. So I just wouldn't phone up a UK mentor and ask, because they would find it confusing, and they would just I know they'd give me contradictory advice. So I guess trying to understand the context, and then definitely speaking to several people, but not too many, because I agree, this thing of you ask more and more people and get more and more opinions, it's not really helpful. It's too slow as well.
Well, I think your point earlier about the critical metric that you're focused on, and how do you have a litmus test that anything that comes through is filtered out by, does it point to that critical metric or not, can be really helpful for folks that are getting a lot of insight or ideas.
Yeah.
And I think leaning into that a little bit more too, what about with product? That's the other side that I see with a lot of startups, especially in the software space, is big ideas for features, big ideas for expansion, lots of ideas coming in from clients or even employees for where the product should go. What's been your process to develop a roadmap and how you see the future of the product and evaluate, specifically feature ideas that come through?
Sure, absolutely. So I think what I've learned and recognized talking to lots of people in this game is at our stage, we do have to be very much led by our customers, and it's almost, we can't be too focused really. So in terms of product market fit and getting to that next milestone, we kind of got to 10 customers and we got to 50 customers, and now we're getting to 100 customers, and really focusing on existing surface area of the product and incrementing and making that kind of better, rather than bloating and going out sideways. I definitely see already we've got more surface area in our product than some companies have that are quite a lot bigger than we are in terms of customer numbers and revenue. So I think a tight focus on the current surface area, and being very much led by what customers need right now, so existing customers, prospects, where the common ground is. And then we're certainly doing some very innovative things, where we're doing, inventing the next thing, but that is pretty small as a resource allocation. Most of the resource is on incrementing and improving the current product. So those would be some of the basic principles, I'd say. Also, I was keen, you made me think there, Andy, just to go back to a previous point about decision making and just kind of focus in general. I think if you look at what we're doing now with our VCs on board, we have fundamentally all got the same goals, because we all want to grow this rapidly and get this product out to lots of companies and win market share, and we've kind of got the same agenda. And that's very helpful, because of course we are under pressure from the board and the VCs to achieve the numbers, but it's our own pressure because we actually want to do it. It's all the same agenda. And I think where things are less healthy is where people have different agendas. So, and on a related note, prior to becoming venture funded and we were bootstrapping, a key thing every day was just surviving and just paying the bills. And so we would be distracted with all sorts of things if it would help us to pay the bills. And so what's been really positive for me is now we are not thinking about short-term cash flow. Of course we're thinking about medium and long term, but short term it's just not a concern. And so we can be making the right decisions for the long term rather than being pulled all over the place. And I think that helps when you talk about product decisions as well. We've got a much longer term focus now than we ever had before.
Yeah, I really like that line of thinking, is that, and I don't know if I've ever, brought it together like that in my own head, but this idea of when you're bootstrapping, there can be a lot more pulling in different directions because you got to find money to do what you need versus, when you do raise money, it lets you hone in and have a little bit more bumpers towards that vision and that critical focus. So it's really interesting.
Yeah, exactly. And I think what we did, I mean, certainly wasn't perfect at all, but bootstrapping to the point of getting real traction. And again, I think Jason Lemkin talks about initial traction and initial scale. So we hadn't got any scale, but we had got traction, and we'd got a good idea of how to start scaling, if you like. And so that was on a bootstrap basis. And then when the funding came in, we then were able to close down the focus, if you like, narrow down the focus, and then execute. And that worked well for me. I think if we'd kind of raised funding with no revenue or something, or one or two customers, then that's again, I think a slightly different ballgame.
Yeah, for sure. Andrew, I would just be curious, with all that you have on your plate as a founder growing this, business, what are some of the things that you do to disconnect, to recharge, stay focused, driven, etc.?
Yeah, I mean, I'm really kind of focused on work and building this business, and I think my interests really are things like business and networking and these types of things. So they kind of align together quite a lot. And I guess with us all being in lockdown, it's been a great excuse to just get completely stuck in to that. And this is a critical period for me right now. So a lot of my hours are focused on this, and I'm enjoying it. It's all positive. I mean, I think, there's, in terms of outside of work, I'm really interested in hiking and walking and exercising. So being in the Bay Area with my wife and I, discovering all sorts of great places and going down, quiet areas where we're not getting within 2 meters of people and walking. We've got our dogs, and I mentioned the 2-week journey from the UK to the West Coast, and that was because we didn't want to fly long haul with these animals. So we literally brought them over. We brought 2 dogs and a cat, believe it or not, over on the Queen Mary 2, and then we on an RV. So lots of dog walking is good. We enjoy wine, for example. So again, whilst most of Napa is shut, it's nice to be in this region. So those would be some of the things, traveling and exploring new places. But I guess this has been the last 12 months in a new country, in a whole new kind of world, has been exciting. And maybe I'm still in that kind of honeymoon period, but it's been a great 12 months just enjoying being in a new location.
Any challenges with work-life balance? I think, especially I kind of want to get the perspective of someone just raised funding. They're in that mode. They've got a lot of pressure behind them, and I think any of us that are in this seat that likes founding a company enjoy the pressure and the speed, but still, any challenges with the work-life balance side?
Yeah, I mean, I don't really see it like that, because I'm so focused on work, and I want to be doing this. I really don't feel like I can't do anything else. I really kind of have to be doing this, want to be doing this. So I don't feel that. I think, of course, there's always pressure points during the quarter, of different things going on, whether it's so there's pressure, but I don't see it as being a challenge that I'm not expecting, or like a work-life balance challenge at all. I guess one thing I have been enjoying in the early days of being on the West Coast is almost all of my team were in the UK until recently, and now the US team is growing. But the 8-hour time difference is quite good, because I could kind of get all my UK and Europe business done by 10 in the morning, and then it goes quite quiet, and that means I can then focus on strategy and kind of growing, the good old working on the business rather than in it. And that is, of course, changing now because we're building the US team. But it's just been quite a fun thing over the last year yes, there's a huge email inbox at 5 a.m., when the UK is already in the afternoon. But then you can kind of get on top of that and have the rest of the day with a little bit less intensity of inbound activity.
So when you said when you first, made your move to the US, you drove an RV across country?
Yeah.
So what was your favorite stop?
We barely stopped, actually. We literally did New York to San Francisco in 4 nights. And so we were driving kind of like 16 hours a day or something. But we did stop at the Grand Canyon, and that was a slight detour. So we thought that was the one place we would have a bit of a detour. And the amusing thing with that was, believe it or not, it was snowing. It was heavy snow at the Grand Canyon, and we could see nothing. So we arrived, fairly late on whichever day it was, saw nothing, camped overnight in the RV, got up in the morning, still could see nothing, and then we just went on our way. But that probably was the highlight, seeing nothing at the Grand Canyon.
It's a fun drive. Tony and I did it once. Drove
Really?
out to San Francisco from Cleveland together. So
okay,
it's an interesting one. We did the same thing, like 3 days, I think.
Yeah,
that's fun. So I have a question that I want to ask every founder that we interview this year. And so what I want to know from you is, if you were able to go back in time, right when you started the business, first month, and sit down and have coffee with yourself, what advice would you give to yourself about what you're doing and where you're going and what to be thinking about?
Sure. I think the main thing would be about this kind of balance between bootstrapping and venture funding and focus. And I think what I would say is I think I hadn't really considered that we would be raising and kind of going on this trajectory in this timescale. And now I know that's possible, and how to go about it. I would say I would have been told myself to be more focused on building this SaaS product, earlier in the journey, and then kind of setting up in the US and raising the funding sooner and just getting on with it. And the fact is, we've been a bit more capital efficient, and we've taken it a little bit further before we did that. But that's probably taken us an extra couple of years, really. So I would have just chopped out a couple of years and been more focused from day one.
Would you just push on that a little bit? Would you call that being less risk averse, or what is for others that are out there? Is it would the advice potentially be like, just go with your gut, move faster, take risks faster? How do you summarize that a little bit for those folks?
I think psychologically, again, the sort of culture that I've come from is all about, a successful business is one that makes a profit, a bottom line profit, and therefore kind of if your bottom line is in the red, that's kind of very, very bad, and that was ingrained into me. Really, it's no one's fault. It's just where that's the culture I came from. And what I would say is, once you can demonstrate you have got something which you can scale, and you've got some traction and some kind of product market fit, then as long as you've got a good gross margin, the kind of what happens down the bottom of the P&L is really you need to get on scale and go faster and grow. Growth is more important than profit in those early days. And I think that would summarize it, that once you've got traction, growth is important, and bottom line is less important. And I hadn't really realized that.
I think that's great, especially for folks that are early in their journey, just having that perspective. So that's awesome.
Good.
Great. Well, we're just about out of time here, Andrew. I want to say thank you again. This has been awesome. Some really fascinating insights, and we wish you certainly the best of luck as you guys continue to grow and do great things. I would just encourage everybody to go check out enable.com. Andrew, this has been fantastic. Again, thank you for your time, and thanks to everyone tuning in and watching the show.
Yeah. Thanks for having me. Great to talk with you guys.
For sure. Take care, guys.
Okay.
Bye-bye.
Thanks.